Okay. All right, everybody, hello. How's everybody doing? Hope everybody's well. Welcome to another weekly webinar. Let's see. Okay, just making a quick post, but go to get started. Yeah, hope everybody's well. It's been a very slow week for me, man. I honestly, most of these days I didn't see anything. Everything looks super choppy, especially today. But we can go ahead and get started with my review. It won't be too long. I only have one trade for this week. Let me pull up the before afters 1 second. Okay, so I'm gonna go over the entire idea. Just wanted to show you guys the before after. It was I did catch it a bit late the after just because we were in our zone for only, let's say, I think about 2 minutes. But my general idea was a sweep plus OFD model, and then I was just looking for the continuation into relative equal highs. But I can go ahead and explain that in depth here on the chart, right before after. And my execution was here. So let me explain the general idea here. So I know that from the previous day and even from the previous week, we have been very, very bearish, right? But realistically, just because we are bearish from one direction, doesn't mean I always want to sell. Like the only problem that I ever see with forcing continuations over reversals is the timing aspect. Like you don't want to buy a premium and you don't want to sell a discount, if that makes sense. And obviously that's, no shit, right? But the consensus with that is that you don't know when an external leg is going to solidify, right? We know we're in a trending market, but we know also that once we have an internal, let's say this is a M15, therefore from an M5 internally, this is technically a reversal break of structure, meaning we are now internally bullish. However, this is also from an external POV, giving me a solidification of the trading range. I know that I'm essentially looking for a conversion here so that I can continue lower because I want to force the reversal. However, if we have something that is kind of just melted over the past week or so, it's a bit tough to continue selling solely because we have only just now gotten the first continuation break of structure, meaning internally this is technically bullish, right? So I would need some type of bearish conversion to justify any type of bearish move. So just going solely based on that information, I know that we are bearish. I know that there's a CBOS. I know that there was a sweep here. So I know that the internal order flow here is bullish, right? Therefore, I know that the internal structural range at the time is technically bullish, right? And mind you, this is before my execution. So when I'm in this situation, yes, we are bearish externally, but I'm a scalper, right? Therefore, from the internal POV, which would be the M5 in this point, I know that from a internal POV, like I said, this is bullish. Therefore, the only way for me to be bearish is if this low is taken. Why? Because this is the final low that created a high that broke through here. And also, if this high is to then lead us into breaking the previous solidified low, then I now know that I'm technically bearish because this is now the pullback high of the external range, right? So I have to go based on what happens here, right, to determine if I'm either going to pursue the low or if I'm going to pursue the high. So I know that I'm stuck within the range, so now I can zoom in here. Actually, we can zoom in a little bit more. Right, so at the moment, right, my New York session starts here. I like to get on my charts right around, let's say, that 8 p.m. mark. Usually around 8:30, I do see some type of volatility come in, and then based on that volatility coming in, then I kind of just wait and see what play I can make based on the volume that comes in at that time. So primarily, I do, as you all know, I do only trade New York session. That's pretty much the only session I trade. It's the only one I really care to trade because from a London POV, it's 4 a.m. here, so it doesn't really make sense for me to stay up that late and then also try to trade New York and then also try to, do other things with my day. It would just sleep is never anything I'm willing to sacrifice, at least not anymore. So just by that, I know that I can come into the chart around 8 in the morning and I'll be fine. And I'll probably look for a continuation depending on the volatility that comes in the session. So initially, right when we get into New York, we do sweep a low here, right? We sweep this low and then we also confirm an LG here. However, that's only the CBOS of the internal range, which is high into low. So I know that this could still, I can still anticipate this to continue lower. So this transition here is going to be very key. This doesn't mean that I want to sell here. This doesn't mean that I want to buy here. It just means that I need to see what this reaction does because we are still within this range. So I cannot make a judgment yet on which direction we're going to go, which is the high or the low that I pointed out earlier in the M5. So, right, I note something here, right? There is an internal reaction there. Now let's see why that reaction occurred. I believe it was an M2, M3, if I'm not mistaken. Yeah, right around an M2, M3. Let me see, maybe M5. No, not M5. But there is some type of point of interest here, right? And the point of interest here, right, is not giving me a sign to sell, right? We see the confirmed reaction, right? And the reason why I'm not looking to sell is because we just confirmed, okay, what the fuck is going on? We just confirmed the LG based on the break of structure shown here. We confirmed the LG based on that. Therefore, yes, the external range based on this time frame is bearish, but the internal is still technically bullish. So there is a low. I can actually do this in a different color just to. Right, there's a low into a high, right? And based on the POI, there is a reaction confirmed, right? However, we need to break one of these two structure points in order to justify a bias, right? So we got the initial reaction based on the POI, right? But just because you get a reaction, we don't get a follow through, right? We've been saying that for years. We can get a reaction that just shows that the POI is quote unquote correct / valid, but just because you get the reaction does not mean you're going to get the follow through. So what happens after that reaction, we break through, meaning we have order flow disruption. So if we have order flow disruption, then this is now a model in play. So now let's kind of put the whole case together. We have the whole case, right, that was built on either we're going to pursue this previous high or we're going to pursue a previous low because that is the range that we are stuck in at the moment, right? At least from an M5 standpoint, right? So from an M1 standpoint, I have acknowledged that we have an internal LG. We have an internal LG, right? We have an internal order flow disruption that now favors the upside. So where is my position going to be? In the sell to buy that caused the model. So based on that, that is where I highlight the entire sell to buy, sorry. The sell to buy that also cleared liquidity. So it also pointed out as a valid point of interest. And my invalidation will be at the low, and I am pursuing the previous high because the case was built to pursue the high. If we built the case for it to pursue the low, then we would obviously target the low. And just like that, it's about a 2-to-1, kind of just done and dusted within the next hour and a half. Right, so That's kind of my trade for the week. That was the only execution I was able to take. It was actually very, very detailed. I'm very happy with how that case kind of was built out, because the external was technically bearish, but the internal or the first external range, right, was technically bullish. So it was just dependent on the internal reactions to tell me whether I'm going to pursue the high or I'm going to pursue the low. So that's kind of the breakdown for today. Any questions or concerns with the model that I use, with the approach, the bias, whatever, right? Any questions with that? And to simplify it once more: direction, liquidity, execution.
Can you hear me?
I can hear you.
Okay, perfect. So I have a question regarding the OSD, where you would have placed the invalidation as per the order flow disruption.
Where would I have what? I'm sorry.
Like, where would you placed the invalidation or stop loss if we had only the scenario of order flow disruption?
Why did I use this as my invalidation?
Yep, for the order flow disruption.
For the order flow disruption? What do you mean for the order flow disruption? Like, where is the invalidation of the order flow? Like, where does the order flow disruption become valid? Is that what you're saying? For the LGC? Oh, I mean, yes, you can also argue the LGC here. That you can 100% argue that, and then just take the sell to buy. That's one approach that you can take. Right, but that wasn't the approach that I took. I took the OFD approach, um, which would have been based on, I believe, M3. Right, so there's a POI here that was not topped. Let me use the magnet to show you. Right there. So we have a POI that was not tapped, that we tapped into the POI. And the POI gave a reaction, meaning a break of structure here. And here, sorry. Here as well. Excuse me. So once we have the reaction and then the full POI is broken out, we do break structure as well, but from the OFD POV, this is where the OFD is confirmed. Does that make sense? What do you mean by the invalidation? The invalidation of what? Yeah, this is the invalidation because this is where the sell to buy occurred that caused the model. So if this low is to have been broken after we've taken liquidity and given the move, then I know that we have now more than likely, all right, taken liquidity and then caused an LGC externally. So then from here, if this is to have broken, okay, now I can take a point of interest and then come lower, and I would pursue the previous low here. Yeah, because that's the reaction that caused the disruption. This is the reaction that caused the disruption. That will create an internal structural range. I mean, no, you can't see. Oh, based on this, based on the picture here at hand, this is bearish, bro. This is bearish. How can I say this is an LGC? How can I say it's an LGC? This is bearish. This is bearish as well. This is like essentially a transition from bearish to bullish. Yeah, then ST, sure, sure. I think you're overthinking this, bro. You're overthinking this. You're overthinking this. This is a transition, bearish to bullish, right? But yes, like it could have been a structural disruption. You get confused in SD and LGC. That's because they're the same thing outside of the fact that an SD is a reversal and an LGC is a continuation. Which is why I don't prefer to use like any type of SD. Order flow disruption is probably the best model that I have. It's probably my most accurate model that I have. And just using that with internal external structure is kind of the bread and butter at the moment. Like if I could trade one setup,
Uh,
I think it would be an OFD. Mm-hmm. Any questions?
yeah, I have one.
All right, can you type it out or do you have to unmute? Because other than this is kind of my setup for today. Um, if you guys have any case studies, then we can go ahead and start doing those unless you have any more questions. Cool. Any questions? Whoever unmuted, I think it was Isaac. Sure, you can speak.
Um, Concerning about the order flow disruption, since we are on a 1 minute time frame, I thought it had to take out the previous low there and then before it becomes a disruption because
What does the time frame have to do with anything?
I felt the since it's M1, it has to take that low because that was the only solidified low I saw or I thought of.
But what does the time frame have to do with anything? If this was an H1, it's still the same setup. It's still the same price. It's still the same approach.
Okay, no
Yeah.
problem.
So
I just
what's the question?
yeah, I understand better when you said the time frame doesn't matter. I thought it did when in terms of the other flow disruption.
No. The price is fractal, bro. Everything happens in every single time frame. The external, sorry, is built from the internal.
Ah, okay. I know better now. Thank you very much.
Yeah. The time frame doesn't matter. But that doesn't mean that you should all trade M1, right? Okay, I don't know who this guy.
Yeah.
Okay. Yeah, the time frame never matters. But this is where people mess up is that they want to become swing traders and they want to trade on M1. I'm like, no, for what, man? If you're going to swing trade, okay, stick to the higher time frame. If you want to be a scalper, stick to the scalping time frames. If you want to be an intraday trader, just stick to the intraday time frames. Right? Because usually, right, if I'm looking for a scalp trade, then I'm looking at a scalp target, right? If I'm looking at an intraday scenario, then I'm looking at an intraday target. All right? So the model works from a scalp POV, but I also have to acknowledge that this scalp model will not give me an H4 move majority of the time, right? Because as you can see, my target hit and then I hit a break even, right? That's why I want to be, if I'm looking for a scalp entry, then I have to look for a scalp target. I have to see what narrative is being built and then where that narrative is going to take me, right? That's why it was either I'm going to go up or I'm going to go down. What is happening here so I can see which way I'm going to go. Right? It's kind of the easiest way for me to go about, my trading day. Because there
All right.
was
Thank you.
internal movements as well. For example, if I really wanted to right? If I was on the charts before my execution, right, for example, so this is 6 in the morning, right? I was asleep at the time. But there is other models that play. For example, there's an LGC model, very clear here. And you can easily take the inefficiency, or you could take the entire buy to sell move, right? Because this is now dictated, or has now told me that I'm going to be bearish because of the model in play. So I'll be aiming for here, right? And that alone is about I'd say a 1 to 3. Yeah, 1 to 3. Right, maybe 1 to 2. Yep. Right. Yeah, you could over refine as well. You could have 100% over refined as well, but I don't care to do that. I just want to be in the trade. Why? Because you can hit a stop loss here without invalidating the trade. Because either way, if you want to take this execution here, if you want to take the proper invalidation, then it still has to be here because you haven't broken structure. Yeah, but you're over refining at that point, bro. You're in the micros now. You're looking at seconds time frames. There's no need. There's no need. Like, you're trying to maximize risk to reward, which is okay. But it gets to a point where you over refine. And then you're going to take stupid losses, man. Trust me, you're going to take stupid losses. I know we've all been there. But yeah, if you did want to over refine and you want it to be perfect, because remember, we don't want to be perfect, we just want to be correct for a certain amount of time, then that would have given you 1 to 6. All right, which is okay. All right, it really just depends on the approach you want to take. Do you want to be extremely aggressive? Do you want to be conservative? And if you're going for the aggressive approach, then just know that you might lose more than you win in terms of trade scenarios. It doesn't make you unprofitable. That just means you're probably going to lose more scenarios. Let me get my laptop, bro. You should be on your laptop already. Okay, cool. Yeah, go ahead and do that. Let's go through the case studies. Let's see. I think this is 1, 2, 3, 4. Okay. Okay, now let me... Okay, sorry, I was just reading the chat really quick. Okay, I see. You have both. Okay, you've noted both. Right, so this is like a minor intraday range. You did exactly what I just did with my NQ. You just noted the low and the high of the minor intraday range. Notice a sweep, right? There's a transition. There's a movement to the upside. So now it's just a matter of finding the reason to execute for the upside move. So if I'm looking at this, I see a sell to buy region here, which would have been my point of interest, which supports then, right, a potential model, right, which would have been the LGC. This is something that I find a bit difficult to explain, but like, if we're looking at a trending market, actually wrong, no, that's a bad image, that's a bad example, sorry. Show you a better one. This, I think it's a forced LGC. I think it's extremely forced. Right, and I guess this is more of an intuitive thing. But yes, you technically follow the criteria correctly, but there's something intuitive that I don't know if I can explain here. I don't know if you get what I'm trying to say here, where you just don't want to force any low and any high being broken to be an LG. Usually, the LG has to take out some type of solidified point. Maybe that could be an extra criteria we can add. That could be a refinement we make maybe over the next couple of weeks, where an LGC is only valid if a solidified point has been taken, which technically would also be valid here. But you can also add more dimension to it. Maybe you can have unsubstantial new lows as well, which would then incorporate a sweep. So overall, it looks good. See, it does look good. I do consider this an LGC. Maybe it's just some other idea that I have, but I do consider this valid. And you didn't invalidate your POI, right? Yes, you have relative equal lows, but the model in play is giving you a bullish incentive, and then that bullish incentive based on the inefficiency, and then SLN invalidation. Good. So now I would move, because this is broken, I would move my invalidation there. Just cut the risk in less than half. Well, yeah, let's see. Okay, it's ended up hitting your take profit. Yeah, so you see, this is why I moved my invalidation here. That's why I moved my invalidation here after this break, because there is now another LG there, meaning this is a sell to buy region, which means this is another place to buy. Right? Which means that if you would have missed the initial entry and you wanted to wait more, then you can wait for this LGC to occur and then take the position into the point of liquidity that you're looking for. But overall, good direction. Good direction. Okay, next one. Okay, this is bullish. Looks bullish there as well. But there is SD here because we failed reaction and then we gave him a bearish move, sorry. We gave the bearish move, meaning this is a structural range in play. And then this entire move is the pullback. Yeah. The adding dimension to the models is going to make it less, I'm not going to say probable, I'm going to say less frequent, but it could make it more probable depending on what criteria you add to the model. Like, if I only want to take OFD, that's pretty much confirmed and matches an external direction, then that could make it much more probable than just an OFD. Right? So adding dimension to the models, whether it's more rules, whether it's time criteria. I never really consider the time criteria because I only trade the same times all the time. Right? But it's time, it's adding more concepts to it, and obviously sticking to certain time frames. Because maybe an OFD on a monthly POV is 100%, like let's say it's 100% win rate, but you see these on a monthly, like maybe once a year, once every 2 years, But yeah, this is looking like a pullback. You kind of bought high momentum. Let's actually look into this more. Yeah, you're forcing this here because the reason why I say forced is because there's high momentum leading into a structure break. Therefore, you still have to anticipate that this is going to pull back, take liquidity here. And if this takes liquidity and then creates a sweep model, then I can execute to the buy. I just think you were a bit early for this bias. But overall, the bias was technically incorrect, solely because there is SD here. And I mean, there's a reaction there as well. There's multiple reactions. They're failing, which you can also say there's some type of point of interest, which causes OFD. But more importantly, there's a reaction that failed that created a bearish structural range. And this is just the pullback of the entire move. So now you're kind of just trying to wait and see if you can get a bearish opportunity. So yeah, this isn't a concept issue. I think this is a direction issue. You just had the direction wrong. Okay, this is just 2. Okay, cool. Bearish, right? Very clear bearish break. there is a continuation BOS here, beginning of the pullback, right? Then leading into the solidification of this. So you then see this model. So you could even, the conservative, very conservative, is using the buy to sell and then aiming for previous lows, but you waited for the internal transition because technically it's a CBOS internally of a bullish range, so you're waiting for that to continue. So once it's shown unwillingness, you have a break, and I think we can go to here. Yeah, very good. Don't call that a transition. Don't call that a transition, bro. The transition is the entire thing. This is a bearish to bearish transition, right? Like we don't name a point to be a transition. We name the range to be the transition. So, but yes, I do see liquidity being taken there, and then I do see the LGC because there is a bearish range there. So yeah, I do like the entire buy to sell move, right? So this is good. What is this, like a 1 to 4? This is pretty good. And the reason why I like this compared to that first scenario where we said that I don't want to over refine is because that previous setup, the final buy to sell that you had, it was valid. Here, I don't consider this to be a valid buy to sell. Right? The only buy to sell that's valid here is technically here. So that would have been a very big SL. So the fact that you waited here to then refine the buy to sell is good. Whereas in the other one, it was already refined. We didn't want to refine further. There's just no need. Let's see. Next one. This looks bearish, man. This looks bearish here. The reason why I say it looks bearish is that this is obviously bullish. And then we obviously have the structure break here. So therefore you have the bearish range, and this is technically the pullback. And I don't see structural disruption yet. I don't see any low being broken. Okay, maybe you see it here. I see a sweep there. So once I see the sweep here, and then I see another sweep here as well, and we're back in the range, I consider that no man's land. But let's see how this turned out. Yeah, it looks super choppy for me. Super choppy. The fuel's taking, yes, that creates a bullish range. Once again, LGC. I don't like how this is continuously taking lows and highs, taking lows and highs. I don't like that because it looks corrective. I think this one's a bit forced. Yeah, I think this one's a bit forced. Like, you take out that high, bro, but you're not taking out the external high as well. That's why I say you're kind of stuck in no man's land here, because it does look, this still looks bearish, but yes, there is a reaction here, but then there's a reaction here, but you're still stuck within the range, so like, kind of in no man's land. So I kind of need something to show its hand, and then I want to wait for any type of bearish or any type of position that I'm going to take. But yeah, this one I do not like. Do not like this one. Yeah, avoiding no man's land. That's why I only associate with any type of trending market. As you can see here, we are clearly in a trending market. A trend, right? We're not kind of stuck in some type of consolidation, sorry. Like if you see highs and lows being broken consistently, then you're probably in a range. And then if you're stuck in a range, then you're probably stuck in no man's land, because if you don't know the direction, then you could argue both ways. Like I could have argued, right, like the bearish position here with the bearish POI, and I can anticipate this as liquidity, and then this kind of just continues lower. And then I could also justify the bullish move, right, because externally this is a bullish structural range, so I could just wait for the POI and then just kind of look for the continuation there, right? So it just depends on how detailed you want to be, but you also have to understand which environment is tradable for you. Like, maybe this is a range from an M5, but I don't trade on an M5, right? Technically could be a range from an M5, but as long as there's impulses, then it's tradable for me. Yeah, man, we kind of just gotta take it one step at a time, bro. This is why I do the Zooms. Like, this is why I even do the journal reviews, bro. Like you guys watching videos on YouTube, it can only do so much, you know? It can only do so much. That's why I don't care to keep making like educational videos. Like, I'd rather just hop on Zoom. Let's see what y'all are doing. Let's fix that. You know, I think that's much more productive, and it's much more like bang for my buck in terms of like obviously I'm not making any money here, right? But I'm not spending like all fucking day doing nothing, you know? Like, it's short, it's productive, it's effective, you know? But yeah, let's see. This guy posted some studies. 1, 2, 3. Okay, I like the chart work. Okay. Let's see if I can zoom in a bit. Okay, so why did you enter here? Is this all one case study or this 3 case? Yeah, I need a little bit more, bro. I don't know why you're selling here. But how I would interpret this, well, I can't tell you if this is valid. I can't see the left. This is not SD. This is a continuation break of structure based on high, low. Then this is retracing. And then you have the liquidity grab here, meaning you're technically bearish after that liquidity grab. Therefore, this is the invalidation, I'm assuming, for the bearish bias, which is correct. Liquidity, fair. That's fair. But I more so see that there is an internal low, high retracement, and then it's taken out the target, which is the previous high. So once that liquidity is taken, then I would look for position. But the problem here is I don't know why you're executing here. I don't know why you're executing there. So the bias is correct, but I need you to understand that the bias is not based on any of your notes. The bias is based on this. That structural range that's created from the liquidity grab, this gives you the bias, if that makes sense. We do red. This is what generates the bias. Right, and once you find out what generates the bias, you can be very easy about going about the entry. Right, this is why like I'm such a big supporter of like people who still do fibs. Like, I'm such a big supporter of it because like if you can understand the structural range that's in play, you know, you just use the fibs and you're fine. Right, but I don't need to use the fibs if I just use buy to sells or sell to buys. Like, after I know my range, right, where is the buy to sell that created that structural range? Well, that's here. Right, and very easily you get a 1 to 2 getting into wherever your target is, but you get a 1 to 2 here. But yeah, overall that's good. I just don't know why you took that. I don't know why you took the entry. Okay, next one. I do like the chart work though. It looks clean. I like it. Okay, no. So here, this is not an LG. This LG. right? But obviously there was no reaction to then give you a move. It just kind of went down. Yo, well, give me 1 second, guys. Give me 1 second. Is it storming outside? Oh, wow, it's storming. Oh, never mind. Sorry, guys. I just heard some thunder. But anyways, right, this didn't give you the move. It kind of just gave the reaction before giving you the POI. So this liquidity has been taken, and then it takes more liquidity here. So once there's a shakeout like that, I kind of don't execute. Like, for example, once I'm seeing this, if I'm seeing the shakeout, I'm kind of not looking for a position. But the LG then is here to here, which then creates the bearish structural range. But yeah, CBOS. And I have a question here. What validates your SD here? Yeah, I know what liquid. I know what liquidity. I know LIQ means liquidity for you, yeah. But there is no LIQ here. But what validates your structural disruption here? What is validating that? Because it's not just, this is not validating it, right? This could just be another CBOS. Can you answer that question for me, yes or no? Yeah, but what validates the SD? You could draw on my screen too. You can make it easy, just draw on the screen. It's not the unwillingness that unwillingness is caused after the disruption is confirmed, yes, but it doesn't cause the structural disruption. Like, you can only say it's unwillingness after the SD is complete, but it's not what validates the SD, if that makes sense. I'll make it simple. Bro. Maybe you don't understand my question, but structural disruption is when it's a failure to continue structure. So we have a high into a low CBOS. It's not an LG, that's a CBOS. This is the retracement. The retracement is confirmed after the internal structure break. So once a pullback high is solidified and then it's broken through, that is structural disruption. But how can you be bearish if you just noted a structural disruption? That's my problem. So I think you need to study up on the structural disruption, or you need to book a call with me, or you need to do something. Because the SD is telling you that you're bullish, and you even noted the bullish here, the bullish moves, right? Like there's a CBOS continuation. This is still bullish until this breaks or this breaks, right? So you can't be bearish here because the structural disruption is in play. If structural disruption is in play, you're more than likely targeting up here. Yeah, there's a POI, but fuck the POI. The model is in play, bro. Like, this is already, like SD, it's not just a failed structural continuation. What does a failed structural continuation mean? That means that you are not continuing the current trend that is in play. So if the current trend was bearish, this is shown an attempt to continue lower, but it failed. That's what unwillingness means. That then breaks through. You are now bullish until you hit a bearish or a bullish invalidation, sorry. So at the beginning of the range, this is the bullish invalidation. Then you have a CBOS continuation. This is the invalidation. Yeah, exactly. But bro, screw this. Who cares about the POI, bro? What is the direction saying? Because anybody can mark up a POI and then expect that to give you a move to the downside. But the bias here is technically up. And I don't know what this red line means. You didn't specify what this red line means. I don't know if that took liquidity or if that is a POI from a higher time frame. But yeah, the model is showing you that you are bullish. So until any solidified low is taken, you cannot justify a bearish move. That's just the gist. Okay, what pair is the German? Okay. Ah, very nice. So you see, so this, I'm assuming you took a sweep model, but my problem is, bro, I can't see why you're executing these trades. So I can't see why you're, like, I don't know why you're executing this. I don't know why you're buying here. So I need to see these entries. I think the entry here is good. I just don't know why. But yeah, if there is, let's say, a failed bearish continuation here, then you can justify a bullish move. Then that will lead you to pursue a previous high. But yeah, I don't know. Other than that, I can't really tell you much there. I can't see the entries. Let's see. Okay. I don't think you understand what OFD means, bro. This cannot be OFD if your red line is not broken. If there is no reaction, you cannot consider it an order flow disruption. So this is wrong, right? This is not OFD. OFD is if this POI breaks this high, then gives me a bearish move.
Exactly. That was what I was trying to say.
Uh-huh.
That's why I sent it. Like, it didn't break that, so I didn't consider it to be an OFD. I just wanted to know if I was right about not considering it to be an OFD. I didn't take the trade.
Mm-hmm. Maybe from an internal POV, there's more, but just based on this time frame, no, it's not OFD. Because it's actually
Okay.
what day was this? The 8th. It's yesterday. Let's actually, I can go check that out here in a bit. Let's go check it out to see if, because I don't know if your POI is touching the line or no. I'll show you. See, yes, this is technically correct. But I would need you to zoom in here. I would need you to zoom in, like on time frame. Because based on this time frame, this is not a POI. I need to see the POI where this region is a POI.
Sorry, it's the same trade. It's the same trade, just on another time frame. It's the same one as the previous one.
Okay, let's go look into it. Is it here? Yeah, it's here, right? Yeah. I'll tell you if it's OFD or not. Let's see. What time was this as well? Okay, this is in New York. Okay, cool. So I would consider this entire bullish move to be given based on that sell to buy. Right? This is the high that began the bearish move, which took structure, which then led to the bullish move. So for one, I would have invalidated the POI because I would have wanted, if I was in the mindset that I want to take this to the upside, then I would have needed this to have hit my POI. Because it didn't hit my POI and it gave me the reaction before touching the POI, then if I touch the POI again, I'm no longer interested. Because sometimes, very, very, very often, it doesn't work. Sometimes it does, but very, very often it doesn't. So if the POI gives me or if the move gives me a reaction before touching the POI, then I kind of invalidate the POI. But I've never considered, or I've never thought about using this as a potential, like I'm kind of expecting OFD if the reaction it was already given, because I kind of don't look at it that way. I look at it like once we have this, then we have a bearish LG, right? Therefore, if there is a failed bullish reaction, there, aka structural disruption here, then I can justify the bearish move. All right, but just based on the POI, let's actually highlight the POI. Let me tell you if it is OFD or not. Okay, so no, I would consider this OFD, but I would consider this OFD based on this reaction and then breaking the POI. So then I would probably use the buy to sell, sorry. I would use the buy to sell that created the OFD as my entry position. So yes, it would be, based on this time frame on the M5, yes, this would be OFD. Like, I hope I'm making sense to you. Yeah, my bad if I wasn't clear the first time. But yeah, and I probably would have pursued this low here. This is probably the low that I would have pursued from a scalp POV. But from an intraday POV, it's fair to pursue that, right? But how would you exit the trade? Okay, well, I kind of just want to look at the structure. So CBOS, continuation, invalidation, right? CBOS, continuation, invalidation, right? CBOS, continuation, invalidation. So unless you're like kind of tracking the micros here, this would have been my invalidation, which took me out of the trade. So this is why I pursue the immediate target. Because even if I would have trailed my stop here, I still would have gotten less profit and I would have lost more time than if I would have just pursued my immediate target, which is what I always pursue. But yeah, the reason why I usually pursue the immediate leg is just because it's almost guaranteed. It's almost guaranteed because I have the model in play. Then this model is telling me that we're going to go find more fuel, and that is going to be here. And then there's also like a sell to buy here, you know, so yeah, does this make sense?
Yeah, it does. Thank you.
Mm-hmm. What ends up breaking through? But yeah, any more questions, concerns, guys? Any more case studies you want to go through? Cool, no more questions, concerns, guys? Trying to pull up a UCAT scenario. Okay, go for it. Cool. Just waiting on your scenario. If not, we can go ahead and wrap this up. Cool, man. No worries. Have a good weekend. Okay. So my question is, where is the POI here? There's technically a POI here, yes. Based on this time frame. Sure, I'll accept that. That's fine. I'll accept this as a POI. Reaction, break. But if you wanted to be conservative, rather than looking for the POI, just use the full sell to buy. The sell to buy. And I don't know what you would be targeting up here. But I also don't like that because it's inherently reversal. Right? If this was to, let's say, give the CBOS, then give the continuation, sweep the low, and then give me a failed transition. Okay, now the transition's in play. I would then look for the move. That's kind of like the only way I would take a reversal. Sure. Yeah, I would just use the entire sell to buy, bro. Like, you see how you almost, like, with spread, you could have maybe missed this trade. So that's why I would say, but just use the entire sell to buy. Just use the entire thing. Because that using the full sell to buy,
But
that would have guaranteed you getting the trade.
but my reason for taking that was on the basis of other flow disruption. Was that correct?
See, yeah, that's good. POI reaction failure. POI reaction failure. POI reaction failure.
Okay, thank you. I just wanted to make sure I got that right.
Because there's even OFD here. I mean, this buy to sell, give the reaction, and then give the break. Didn't fully break it though. Just gave a sweep.
It later it went for 100 pips, but I just took it at that.
No, yeah. The only thing I would say is just use the full sell to buy. Use the full sell to buy move. Okay. Nice. I like the clarity on here. Okay, I don't know if I would consider this structural disruption. I don't know if I would consider it SD, but it is a full breaker structure because the full range that took out the final high was then broken, so that is technically a transition. And then here you can see a internal break, even though it's still technically bullish, but it did end up taking that and then coming back. So I don't really have a problem with this as long as from an external POV it worked out, or it works out, sorry. But yeah, I think what really confirmed the trade here is you do have the full buy to sell POI, and then you have the internal reaction, right? I'm assuming the internal reaction is I'm sorry, it's there's a internal model at play here, no? there's something internal here which justified the move, which is why you're putting your stop loss there. Right? I'm assuming. Okay. What is the model at play here, or what was the reason for execution? Okay, it's an old trade. Seems, yeah, it's from July 19th, yeah. Okay. Okay, CBOS. That has been solidified. Okay. I see. You're bearish, okay. Yes, this is a sweep. Yes, I do consider this a sweep because we are taking out a previous high and then there is a failed continuation internally. So that buy to sell is the point of interest. This is good.
Yeah, but Fredo, I was looking for an internal reaction here.
Where?
Where did I get the annotate now? Yeah.
But why though? Oh, I mean,
Yeah, so
let me look back over here. Hold on 1 second. Okay, it's bearish. Okay, I see. I see. I don't think there's a need though because the sweep model is in play.
uh
If there was
yeah,
no sweep model in play, then yes. If it was just a POI and this just went from the buy here directly into the sell, then yes, this would be an entire point of reference. And then maybe you could justify another refinement here. But I like how there was already the buy to sell here, which confirmed the internal ST.
uh
Because low, high, retracement, unwillingness, break. That would be the structural disruption there.
yeah, I was looking for something here for like this to break and then POI somewhere in here, but there was none.
Too choppy. Yeah, too choppy.
Yeah. So
That's the
I
risk,
need
bro. That's the risk.
yeah. I should have. So this was what I documented after because this was the real move. I was looking for something here
Mm-hmm.
and did it happen? But after session, it happened to
Yeah.
here. But
Uh-huh.
yeah, if I entered, I wouldn't have breaking even or clear stop loss or anything. So
Well,
yeah,
technically, no. Technically, no, because we're on an M15, right? So these moves are going to take some time. So once you hit the entry, right, I would look for the final internal structural range to then move my stop loss, which would have been, okay, I guess here. Okay, then yes, you would have broken even. That makes sense. That makes
yeah,
sense. The only approach that would have worked here, I think, is if you use the entire buy to sell, which is here, because if you use the entire buy to sell, you then have to wait for the external to break, which would be here. So then once
yeah,
it
yeah,
breaks, then you can move your invalidation here.
yeah. That makes sense.
So yeah, sometimes under refining could be better. It just kills the risk to reward, but that's okay. There's an internal buy to sell. Prices will mitigate the intraday inefficiency. Do you have the chart for it? Oh, okay, it's okay then. No worries. No worries. But yeah, any more questions, concerns, or can we wrap it up here? Okay. Okay. So I see I see this. I see the mistake here is you're not acknowledging reactions. Right? Yes, there is a range here, but there is a reaction here, meaning this is the low, high, retracement, that's solidified. We now have unwillingness and we have a break, meaning this is now bearish. So you cannot buy here. It doesn't make sense because the reaction has already occurred. It's like what I said with the guy with the gold example, where if I have a POI and there's a reaction before the POI and then I have that reaction be given and then it taps the POI, I kind of invalidate the trade. This is a perfect example, right? Where yes, you could have technically taken any type of POI here. That's okay. It's fair. I understand. But there is a reaction before the POI, meaning that is the pullback low. This is the pullback low reaction, then that's broken through, you're now bearish. So now you
Okay,
would need something to
I
break
thought
now.
I thought it was just a liquidity taken for then
No.
coming
Yeah.
back then.
Mm-hmm.
Okay.
Mm-hmm. Liquidity, no.
Okay, I understand.
Yeah, liquidity is just fuel, bro. It's just fuel. Now, which direction? That's dictated by structure. That's why I use solidified points. Like 1, 2, 3. That's solidified. And then there's now a break into the downside. Because you can even argue, like here, there's a reaction, but this reaction is based on low, high, retracement, reaction. This continues higher. So this is still valid. Like this is still bullish there. So once this breaks, that's a CBOS, right? So if that's a CBOS, that means that we have a low into a high, and then this low created the final high. Therefore, there is a solidified range there. So now we have the internal move into the downside, meaning this is still makes sense here to look for the bullish move. It still makes sense. But because you have a reaction and then unwillingness break, then it's no longer valid. Yeah, it's one of those, that's one of those rules, bro, that took me months to like completely understand. It's just all experience, bro. It's all experience. Sure. I see the model there. I see the sell to buy, but once again, bro, there's reaction break, meaning, right, if we're looking at this internally, there's a very clear low, high, retracement, reaction, break. Because there's a break, we now have high, low, retracement, continuation downside. Yeah, but there's a reaction. And there's a reaction there as well. So scalp and micro reactions, yeah. Like I would have wanted this POI to have been hit in this move here. If this move here leads into here, then I can still be bullish. But the reaction occurred before the POI. Right, yeah. So you see here, you could see that the order flow, right? There's the reaction that failed, that creates a structural range, came back into the POI, and it met its target. Okay, so I'm assuming this is an M1 entry.
Yes, it is.
So if you're an M1 entry, then you have to take M1 target, bro. Because this to me is technically a continuation, but the M1 model is meant to target the immediate low. And then after this, it could probably shake out and then maybe create an LGC, and then I can justify a move to the downside. But you have to take TPs based on the time frame that you're taking the trade. We talked about this last time, bro. Like if you're looking
Yes.
to trade, it doesn't make sense to just stick to M1 because more than likely you're going to lose a bunch of trades before you get the move, and you might not get the move that you wanted to begin with. So for here, it does look very clear in terms of there is a buy to sell, so you have the buy to sell noted, and then there is an internal reaction. So for me, because there is an internal reaction off of the POI, I wouldn't have sold here. I think you're rushing it here. I would have waited for this to break, because this then means that we have a low high retracement. So I still anticipate this high to be ran unless we have unwillingness. So if I do have like a failed reaction here, so let's say there is an internal SD here, then I can sell and I would pursue relative equal lows. And that there is like a 1 to 2 position based on this.
Okay. The reason why I didn't target there before, because the trade then was like to 101 maybe, or even less. So I wanted to target and give it a little more space to have one minimum like 1 to 2. But yeah, just went to break even and
You have to go
back to
based on what's given to you, bro. You can't go based on what you want. Everybody wants high risk to reward, but you have to take what the market gives you. That's why I
okay.
target lows. I don't go based on risk to reward. Like my risk to reward can go from a 1.8 to like a 3 to a 4 maybe. It just depends on the trade and the perimeters, right? Like, but I have to follow the same rules no matter what.
Okay.
But yeah, I don't see any other positions here based other than that.
And also, can I ask you another question?
Mm-hmm.
Yeah, okay. I'm trying to switch the style from high time frame to low time frame just because, I can't, for example, I wait too much time for a setup to occur on like H4 or H1, and then I don't get the entry, or, it goes like to loss, and I wait like for that setup to occur like 1 week, 2 weeks, 3 weeks. So I noticed that on the like little time frame, I got the same setups, and basically I can take the same trade without even taking like that long.
Mm-hmm.
So so this is the only thing that why I'm trading like the low time frame, because it's like more opportunities, and I get the same one, like 1 to 2, 1 to 3, 1 to 4 risk reward.
Yeah, you're gonna get the same risk to reward no matter what type of trades, whether it's swing, intraday, scalp. That's why I choose scalp, because I can see setups, bro, more than likely, because I look at 3 pairs, right? 3 assets. Because I look at 3 assets, I can find at least 1 or 2 setups every single week. Maybe I don't trade them, or maybe I'm not on the charts when they happen, but they happen, and that's for me, that's what's important. Because as long as these setups are still occurring, that means there's still opportunity for me to continue. So that means that I'm doing something right. But if you're wanting to be like an intraday or a swing trader, then you have to, like for example, it's a relationship, right? The higher in terms of the level of trader that you are, whether it's scalp into swing, or let's say scalp into position, right? The higher you go in terms of the type of trader that you want to be, and you compare that to the number of trades, right? The number of trades, we could say, let's say one, or let's say, I'm sorry, not number of trades, number of pairs. I'm sorry. The number of pairs has to go up as you go from a scalper to a swing trader or a position trader, sorry, right? The number of pairs has to go up if you want to get the same amount. Actually, let me do a different color. If you want to get the same amount of opportunity, right? In order for the same amount of opportunities to essentially be constant, if you're going from a scalper to a position trader, then you have to trade more pairs, right? Just like the inverse. If you want to have the same opportunity, but you want to go from a higher time frame to a lower time frame, then the amount of pairs that you look at has to decrease. Because trying to
Okay.
scalp like 5, 6 pairs is very difficult, bro. I've tried it, it's very difficult. Like at least for me, it's very difficult. Because
Okay.
it's too much information and I'm only trading for a couple of hours, so I'm trying to do a bunch of things with a bunch of different pairs. So I have to decrease the amount of pairs if I want to have the same amount of opportunity so I can capitalize. Does that make sense?
Okay. Yes, makes very sense. And also what I'm trying it difficult is that when I am a swing trader, I am looking like to 10 pairs differently and to mark all the points to check them, it becomes really like difficult from checking them and waiting for them. So I prefer like to stick to 4 or 5 pairs during the week and just trading scalping. And my idea like back ago was just to be a swing trader. But even if I am a swing trader, I just wait, for 1 to 3, 1 to 4 risk reward. So what's the point? I do this in the scalp and do it during the day, I'm done, and I go out the charts. So I don't have to look them all the day, all the weeks.
Well, I wouldn't say what's the point, bro. I wouldn't say that because that's assuming that swing traders make less than scalpers, which is not true, right? The amount of money you make or the amount of trades that you win is a skill thing. It's not a type of trader thing. You know what I mean? Like, there's so many swingers, bro, that are very successful. I'd argue there's probably more swingers that are more successful than scalpers, bro. Maybe not with this style, but I'm talking more in general, right? Because I've never really known more than like I've only ever seen like maybe 5 accounts online that are very good scalpers, right? But whereas in comparison, I've seen a lot of swing traders that are very, effective with what they do because they more than likely incorporate the fundamental side. They more than likely are very, very patient. They're more than likely obviously stick to the rules, but are much more patient because the amount of opportunities is less compared to a scalper. So I wouldn't say what's the point, bro. But I don't want you to confuse more opportunity with more profit because that's not true.
Okay.
Either way
Okay.
is going to work for you. Either way, it's going to work. You're going to get the same result, right? As long as you obviously stick to the general plan or consensus in terms of like if you want to be a swinger, you have to stick to swing timeframes, and you have to have more pairs per se if you want to get more opportunity. Whereas if you're a scalper, then you have to capitalize on the opportunities that are given to you because yes, you get more opportunities, but you get less time to get into these trades, meaning you will probably miss more trades.
Okay.
So it goes back and forth, bro. There is no better. There is no better. There is no like. That's why I don't say what's the point. It's just like it's a preference thing, bro. And it's just like finding what works for you. Both of them could work for you. You just have to figure it out.
Okay. Makes sense. Thank you.
I hope that chart was cool. That's like
Yeah, very cool.
charts like that on when I took economics class a couple years ago. But yeah, any more questions, guys? Yeah, I did the same thing with inefficiencies. It's like stuff I learned in economics.
But also, I wanted to ask another things. This style on high time frame works the same, like
Yeah, why
because
not?
okay,
I
because
just
sometimes
don't do
I
it.
just go like over refinery and I miss like a lot of entries. Like I go too much in depth, maybe.
Hmm. Like I mean, this doesn't matter. This doesn't matter. It's just there's candles, there's sell to buys, and there's models, right? So what is my direction? Where is my sell to buys, buy to sells, depending on the bias, and then can I execute based on the model? Maybe. But where I do find it difficult, if I'm a higher time frame trader, is how low do I go? If I'm a swinger, okay, how low do I go? If I'm finding my biases and my take profits on the daily and then my stuff on here, should I go lower to then find a model? Or should I just take the position? Then these are questions that you got to ask yourself. Because from an M1, it's very simple, right? Because I know if I'm going to win or lose, I'm going to win or lose within the next 15 minutes, So there's definitely some nuance to it. Like there's going to be new questions that you have to ask, but it's the same with scalping. Like there's just different questions to be asked.
Okay. Okay. Yes, this is the point where I found myself.
Mm-hmm. And I don't know if I don't know many RCV guys that do this from a swing POV. But maybe I don't know. Maybe I can ask the group, see if anybody's like that. But for the most part, I think the reason why people stick to scalping is because it's what I show, it's what I do, you know. But I'm not opposed to the swing POV because I did try it for a while. The reason why I stopped doing it was just because like it was too many pairs and like sometimes the opportunities wouldn't show themselves for like 1 or 2 weeks. So it's just like, okay, I'm gonna have to make sure that if I get less opportunities, even though I'm trading more pairs, then I probably have to up the risk. But then if I go on a losing streak, then it can go really bad. So I'm just gonna stick to the scalping, you know?
Yes, and also this is the point. Like to wait for 1 week, 2 weeks for the setup to occur. And I am like not willing to do that,
Mm-hmm.
at the same time.
Mm-hmm.
So no, I'm right now I'm finding myself, in this like say in a bubble because I don't know if I have to stick to like 5 minutes, 1 minute time frame or go like a little bit more higher. So I'm giving myself like these 4 months to understand which is my style.
Yeah, yeah, that makes sense. But yeah, any more questions, concerns, guys? Exactly. So it's just like, whatever. Because there's so many things that also like come into play here, bro. Like you can up the risk, yes, but like if the losing streak does come, fuck, you know? And then if it doesn't come, then maybe I'll catch a win streak. And yes, with the up risk, I'll get some big returns, but to get a win streak as a swing trader like that, I'm sure that only happens maybe once, twice, 3 times a year max, you know? So it's always like, it's all like there is no right answer, you know? That's why I can argue both ways. It's a bit tough. It's tough because I'm trying not to be biased, you know? We'll see what BTC does, man. I want that shit to die, man. I'm not a crypto guy. I haven't even looked at this. I think I was bearish on it last week. Yeah, I was bearish. I thought this low was gonna be swept, and oh wow, it actually. I was looking at this turbulence point here. It didn't reach, but here's what's interesting. Let's look at this. Let's look at this. Interesting here. I'm actually gonna highlight this so we can remember. Low, high, CBOS, right? Retracement, confirmed. And then we have unwillingness here, which creates a structural range. Then the pullback based on the buy to sell here, right? You can see the buy to sell. And that's created another bearish structural range. So like there's 2 areas of interest. It's here. And then it's here. Because this is the buy to sell that caused the move into the downside. So this is very important, bro. Very important. But I mean, I would love to see this, you know, just give me that. The lower the better, man, honestly. Lower the better. Yeah, man, just come on. Just give me something, especially with elections coming up, so much uncertainty, right? Same thing with here. It's just like, is this going to react from here, you know? I don't know if it's going to react from here. Same with NAS. It's at a relatively the same point. And the reason why I'm only iffy on that is because the monthly is in a POI. They're both in a POI, you know? So I think we can probably get down lower to at least here. I would hope so. I would love to see that. I just need to see something internally because it does look like we're kind of correcting, but it also, I can argue that there is a structural disruption and that this could really just go make new highs, you know? Or at least to here. But yeah. I guess we will see. But either way, I couldn't care less, man. I'm a scalper. I don't care. I will say, though, if you're a good scalper, you're more than likely... What is the word? What is the word I'm thinking of? If you're a really good scalper, you can technically be recession proof. Technically, if you're a good scalper. And obviously you have a platform to trade on, right? But yeah, gold. I don't like, it's a no man's land, bro. It's a no man's land. Like, low has been solidified, high has been solidified. Don't like that because then it could really just start becoming like this. Like, especially because we've just swept this high. This can really just start doing this. But if we were looking at this from a Wyckoff POV, it could be a distribution, right? We have a UTAD, LPSY, and then hopefully another LPSY, and then hopefully gives me a downside move. But it's failing to break these lows, which is what's kind of turning me off. So I'm not bearish on here. Like technically I'm bullish just from the structural range, but because we're stuck in no man's land, it's kind of difficult. But yeah, other than that, if we have no more questions, I can go ahead and wrap this up here. Yeah. Appreciate it, bro. Appreciate it. Yeah, man, no worries. We can continue next week. But yeah, I have some big announcements coming up. Once it's almost done, then I will let you guys know what they are. But yeah, other than that, I'll see you guys in the next one.